Hey everyone, welcome back to the weekly market analysis for the week ending January 13th, 2023. Just a couple of little notes here. Don't forget to like this video, hit the like button. Don't forget to subscribe. And then I'd also direct you to my Twitter account. You can follow me on Twitter at Mr. J. Thomason. And also you can subscribe to my newsletter, which is on Substack, befinanciallyfree.substack.com. Both of those links are in the description below of the video. I just want to mention before we get started here that I'm going to be approaching these weekly analysis videos in a little bit of a different way. I'm going to just purely focus on TA price levels rather than include all of the stuff on data analysis for the data analysis, excuse me. You'll have to check out my newsletter. The free weekly release will have a lot more of the data analysis in there. And I thought that one of the things I could do to help keep these videos a little bit moving a little bit faster and a little bit more useful for all of us is to just focus on the TA and not get so caught up in some of that other stuff that's going on. Because price is king, and so we want to make sure that we're following price. And so I'll be doing that. So what I thought I would do to start off with is just get a general view of the markets. And I'm going to be using a lot of ETF proxies because they track pretty well to the overall markets. So we'll just dive right in, first looking at SPY, which is the S&P 500 tracking ETF. And we've had some significant price action today. We are above the 13 and 26 week moving averages, which are pretty big long-term trend indicators. We are above, but I do want to make a note for you that the blue line, which is the shorter duration moving average, the 13 week, which is approximately a quarter length of time versus the 26, which is half a year's worth of time. When this blue line is below the yellow line, then obviously the overall trend is still down. However, these moving averages are both moving sideways and starting to curl up. So when you see these moving averages starting to curl up, that tells you that at least in the near term, the price action is more likely to head towards the upside. Obviously, nothing is guaranteed, but we do want to be aware of that. So while the overarching trend since at least March, April is down, has been firmly established down, we do want to be aware that this counter trend move can go for a while, and if this blue line ends up flipping above the yellow line, then that's going to be a sign that obviously that we're probably going to be potentially heading into a new bull market. Again, no guarantees, and these are just probabilities, and that's what we want to be about here. We have a 2 at the bottom here just to kind of give you an explanation of what's going on here in this second panel towards the bottom. We have 2 trending indicators here. We have the white line, which is kind of a shorter term trending indicator, and then you have a more long-term histogram here that we are using also to help us with trending. So we kind of have these moving averages are kind of playing the long-term trend, and then the solid histogram here is the kind of a medium-term trend, and then the white line is a near-term trend. And so we want to be aware of that. The near-term trend turned up back at the end of December, even as prices were moving sideways after the collapse in mid-December. And you can kind of see that our medium-term trend indicator, while briefly going into the negative, is positive. And so on a big picture basis, the trend is pretty strong. And then at the bottom we have some oscillators, 2 different oscillators that are tracking very near-term strength and movement. And obviously one of them is showing pretty heavily oversold. Now this can stay oversold for some time. So what you want to watch for is not when it becomes oversold, or I'm sorry, overbought. Wow, I just was saying it totally wrong. Once it becomes overbought, you want to watch and see once that line actually crosses back underneath the overbought boundary. And then our purple line here, which is kind of an underlying strength indicator. It's an oscillator, but it's measuring more of the strength of the move rather than the volatility of the move. And this is a much slower moving oscillator. And I just want to show you by pulling back, you can actually pull back and see that the last time it read an overbought reading, at least this purple line here, was all the way back in November of 2021, right before the SPY peak. So I do want to call out that that oscillator can take a long time to move. So just be aware of that. So I know I spent some time talking about about all of the different indicators on the screen, but I just want you to be aware because I don't want to explain in every single chart. So SPY in the short to medium term, obviously looking at continuing to move upside to the upside, with some awareness that if the long-term momentum indicators flip back to the upside, then that is a signal that our price action to the upside could be sustained, not just in a near-term basis, but into multiple months worth. So just want to call that out. On the Qs, QQQ, this is the NASDAQ tracking ETF, lagging a little bit, just like the NASDAQ as a whole, popping above the 13-week moving average, but not quite at the 26-week moving average. And I'm not really sure what this line is doing there, so I'm going to delete that. So kind of similar situation as SPY, where we had the kind of the near-term momentum, near-term trending indicator starting to turn up, and then the medium-term indicator having gone red and now moving up to the positive side. So there was definitely signs that that there was strength building and momentum building for a move to the upside. So again, same kind of story is what's going to happen when price moves up. Is price going to have the momentum to move up above the 26-week moving average? I do want to call out, and this was true on the SPY as well, but on multiple occasions in this bear market, price has come up above both trending indicators, both momentum indicators long term, and they never crossed, so I do want to call that out. And you just have to be aware, you can't be too excited about this move. Basically, when these indicators, if you see this, the orange line has already sloped up, the white line has already sloped up, and then the histogram here has already crossed. When all that stuff has happened, then you've already missed a substantial portion of the move, and it becomes far too risky to jump into the move now. So obviously the call here is to hold. And then the IWM, which is the Russell 2000 ETF that tracks the Russell 2000, I should say. Again, same story. We are well above our 26-week moving average. Again, that's the yellow line. And you also see that our short-term trending indicator has crossed and is pretty substantially above the zero line, and you've already got a positive show on the medium-term trending indicator, and you have already the oscillator, the orange oscillator, is already showing in the overbought range. So to me, what this says is that the move is more likely to get to start running out of steam soon. And so again, what you want to see is if you're a long-term bull, you want to see the blue line cross the yellow line at the same time as seeing some of these short and medium-term trending indicators and oscillators come back down below the zero line or down towards the oversold region, because that'll give you the entry point to the long side. But for now, we're just going to leave that alone. And we're going to come over here, and I'll go a little bit faster. We're going to take a look at some sector ETFs. We'll just kind of run through them really quickly, and if we see something that stands out, then we'll call that out. So XLC, very similar situation to the index ETFs. XLC is communication. XLV, that's the healthcare sector. This one's different. We are already above. We've had our shorter weekly moving average, the 13-week moving average, come above the 26-week moving average, and this is the type of situation that I was referring to earlier that you want to see. You want to see the orange line. We've had the cross here. You want to see the orange line come down towards oversold, and then start to move back up. And you want to see the short and medium term trending indicators below the zero line and starting to come back up. So this is actually a really good spot on pretty good support to take a long position. And then as far as risk management, your stop loss placements should be right below the 26-week moving average. So the XLV here, you can see I've got it flagged here, is an opportunity to the long side going into next week. So I do want to be aware of that. XLB is materials. Similar story to what we saw on the index ETFs. Here you can see that the 13-week moving average is above the 26-week moving average, but there's no actionable signal here because our medium and short-term trending indicators are above the zero line, and our orange oscillator, is well above overbought. So what you want to see is you want to see all of these signals come back. Particularly, you want to see the orange oscillator come back down to oversold, and then that'll give you an opportunity to take another position. And then the better position would be if this white line, the short-term trending indicator, comes off. So that's a hold. We don't want to jump into that position right now. We want to just let that be. I'm going to get rid of these lines. XLK, that's the technology sector. This is very closely related to the Qs, and so we're in a holding pattern here. We don't want to try to chase that price action there. XLF, the financials. This is similar to XLB. We've already got the cross of the long-term moving averages, and so we want to wait for our shorter-term indicators to come back below the zero line and also to oversold. So nothing there. On energy, we've missed the initial move here. So energy has the ideal situation where you're above the moving average, the shorter term moving average. I'm sorry, the 13-week moving average is above the 26-week moving average, and then you can see right here this would have been the perfect entry because you've got the short term. You've got the short-term moving average. I'm sorry, not the short-term moving average. You got the short-term trending indicator that has come down pretty deeply below the zero line, as the medium-term trending indicator is coming below the zero line, and the orange oscillator, is coming in below oversold. And so what you see here is when the orange line crosses back above, then that's usually a strategically good point to enter. So you can kind of see that would put you in the market somewhere around here, and then obviously your stop loss should go underneath that moving average. It's pretty tight, but in this case, because the trend is up, you feel pretty good about that tight stop. So for energy, it's probably the best time to take a long position will be if this trending indicator ends up crossing above the zero line, the medium-term trending indicator. So I'll be watching to see if that happens. So there's nothing actionable there, but it's a lot closer than some of the others. XLRE, real estate, this is similar to some of the others, not really anything actionable here. And then here the XLY, nothing actionable right here. XLU, utilities, here we have something that's about to cross. This is kind of a key crucial moment right here, that the blue line looks to move above the yellow line, and let me see, I got to delete some of these drawings here. I want to delete all of them actually. And then what you'll want to see though is you'll want to see the orange line come back down towards oversold to give you an opportunity for entry. And the even better thing to happen would be if the white line comes below the zero line and gives you that buy opportunity while the blue line gets above. So that'll be the opportunity. to buy on XLU. So really close as well on XLU, just like XLE to an entry point. XLI, industrials, nothing actionable here. XLP, consumer staples, nothing actionable here either. This one is not quite as close as XLU or XLE, but no signals here. And then XHB, which is the home builders, nothing actionable here. And then let's jump into commodity ETFs. So we're going to look at DBC, which is the commodity index tracking fund. And so right here, we're actually in a situation where no, it doesn't quite look like anything is coming. You can see here that our medium-term trending indicator is coming up to cross, but a lot of the move has already happened. The orange oscillator is already moving up. The short-term trending indicator is already coming up above zero, and this is still technically a downtrend, so nothing actionable here. In fact, what I would be actually looking for is a short opportunity. So this might be something at some point next week, depending on price action, is if the medium-term trending indicator comes up above zero, and then we can get a overbought reading on the orange oscillator, then that'll be a great opportunity to take a short position on commodities to the downside. But nothing yet. GLD, I don't even like. This is actually very, very exhausted. So actually, if you look down here towards the bottom, and let me just put this up a little bit bigger, the pink line, I'm sorry, the purple line, when it gets to this first dotted line, that measures exhaustion. And this is not, it's based off of an RSI, but it's not a typical RSI. There's a little bit of a different calculation, and it's a little bit of a longer calculation. So when this thing moves up to that level, it is definitely very overbought, and it's looking to be exhausted. And to me, the price action here moving up, 1.2%. After a move like this is actually starting to, you can see it's actually like curling up to the upside. This feels like kind of like a FOMO into exhaustion sort of a situation. I think everyone is chasing gold. So I'm actually, this is looking very, very dangerous. So this is actually a situation we're going into next week. It might be an opportunity to take a short position and ride a little bit of downside. And then, but if you were to do that, you would have to basically, set a take profit level close to these moving averages on a short position, because what you don't want to do is hold the short and then have it bounce up and then take off and go up towards 200, because you just lose a lot of money that way. SLV, not quite. It's not quite in the same situation as GLD. So you can kind of see this is actually sloping the other direction. So you can kind of see that this is sort of petering out, whereas GLD was moving more like a ramp. So I do want to call that out, but no opportunities, nothing actionable here. DBP, yeah, getting close to, this is the precious metals fund, getting close to exhaustion here. So be aware of that. GDX getting also close to exhaustion, but nothing actionable there. You can see that this one is flagged, URNM. This is the uranium miners ETF, and this is still. You can see that though the moving averages are kind of moving upwards, this is still technically a downtrend, and the oscillators and the trending indicators are up. And I want to pay special note to right here. You can see where I just circled the short-term trending indicator has already curled over, and so this is giving you the signal that this, whatever this move is actually weakening and is already starting to roll over. And so this is an opportunity to take a short position. This is why, again, the orange oscillator is in overbought. So when this crosses back down below, that's going to be the signal to buy. XME, metals and mining ETF, nothing actionable here. USO, downtrend. It's actually getting to, you can kind of see the green right here. This is actually setting up to eventually be a short position, but nothing actionable quite yet there. XOP, nothing actionable here. OIH, that's the oil services ETF, nothing actionable here. It's interesting to see oil services to the upside. This actually looks a lot like XLE as far as like the trend being up. IEO, oil and gas exploration. This is near term looking like it's getting overbought and ready for a short entry, but nothing exactly actionable yet. The Invesco DB Oil Fund, nothing actionable here. Getting close to a place where you can take a short opportunity, but nothing yet. DBA Agriculture Fund. This is something that I'm looking at as a potential opportunity in the future, but right now it's just getting beat up. But you can actually see that the near-term indicator is starting to turn up, and so it's entirely possible that we could get a small relief rally up towards this 26-week moving average. So I do want to call that out as well, but it's the indicators aren't supportive of me trying to buy this, because it could always go lower, and the risk to reward doesn't seem good enough for me in this case to buy this spot. Because you can see, though it does on occasion come up to the 26-week moving average, it has hit the 13-week moving average quite a bit more, and so again, the risk to reward not quite ideal there. And then BITO, this is the ProShares Bitcoin Strategy ETF. This is very similar to Bitcoin. If you look at the all-time trading index on TradingView, this is getting to severely overbought, exhausted, and actually price action on Bitcoin has moved up quite a bit since the close. And so what you actually see here is the price action. You can see like where the blue line is actually up there. That's where it actually should be. And I would reckon that if the RSI based indicator that I'm using down here was still allowed to go during after hours, this would probably already be showing exhaustion. So to me, this is going to be a short opportunity. What I'm going to be watching for is when the orange oscillator curls down and crosses back below the 80 line. That's that top dotted line there. That's going to be the signal to me to take the short opportunity. I actually, on Twitter, I'm on record recently as having said I think the bottom is in because of one of my indicators that Bitcoin closed above. So I don't mean to say that I believe with any firm conviction that Bitcoin is going to go lower and make a new lower low. But that doesn't mean that price is just going to go up in a straight line either. Price has come up on Bitcoin. If you go, what's the first trading day of the year? Let me see here. So on the first trading day of the year until now, Bitcoin is, at least BITO is up 18%. And if you go to the actual Bitcoin USD on TradingView, it shows that Bitcoin is up 20%. So it's come up very quickly, and it's more than likely that at some point in the next few days, it's going to give you an opportunity to take a short to the downside, which if you're into taking tactical trades, that would be an opportunity for you. And let me see if there's anything else I want to take a look at. No, we'll leave it at that for today. Maybe next week I'll go into either currency or emerging markets or fixed income. But for now, that's it. I hope you like the new format. I hope that these signals were helpful. Go ahead and once again, if you haven't already, and like and subscribe, and check out my newsletter and my Twitter. Links are in the description of the video below. And I will see you guys next time. Have a safe weekend. Adios.